Many times you hear traders saying market has formed a doji pattern and you start thinking in your mind,
ये दोजी दोजी क्या है? ये दोजी दोजी?
hello friends, my name is Rupak De and I welcome you to this channel. In today's video, I'll be discussing about doji and how to trade a doji pattern. A doji is a Japanese candlestick pattern forms when traders are mostly confused about the impending market direction. A doji has a negligible body and wicks on the both side. So here we can see that a doji has very negligible or slim body and wicks on the lower end and also on the higher end. Doji forms when price of a stock closes near its open. So open and the closing price are almost same. Let us see an example. Let's say Nifty starts at 15,100 and it moves up higher to make a high of 15,300. Then for any reason, for any significant event or anything, Nifty comes back to lower level at 14,950 before closing at 15,098. So Nifty started at 15,100 and now closing at 15,098. So the difference is only for 2 points and we have a lower wick and a higher wick and the body is very slim and we can call it a doji. Doji patterns are commonly found at market tops and market bottoms. In other words, we can say that a doji indicates a possible market reversal. It may be a bullish reversal or a bearish reversal depending on the position of the formation. If it forms after a rally, we can expect a bearish reversal or at least pause in rally. Or on the other hand, if it forms after a prolonged correction, we can expect a bullish reversal or at least pause in correction. But a doji pattern is not enough to call a market reversal or price reversal. A doji always need a confirmation candle. The next candle should be significant enough to point a directional movement. So after a doji, if we have a significant bullish or bearish candle, we will have a directional trade. So how to trade a doji pattern? As I said that doji pattern is not enough to call a market reversal, right? So we need to wait for an indication. We need to wait for a confirmation. Like doji has formed here and we need to wait for the next candle. If the next candle is bearish one, like doji has formed on the market top and the next candle is bearish one, so we will initiate a sell call when there is a bearish candle after the doji formation. So we will take a short position and we will keep a stop loss at doji high or doji close depending on the risk taking capabilities. On the other hand, if the next candle is bullish one, we will take a long position keeping a stop loss below the doji low or the doji close depending on our risk taking capability. Scenario 1, it's a doji after a rally and the next candle is bearish one. We will take a short position with a stop loss at doji high or doji close, right? Scenario 2, doji forms after a rally and the next candle is bullish one. We will trade long with a stop loss just below the doji low or the doji close. Scenario 3, we found a doji formation after a market correction. So what we will do, we will short keeping a stop loss above the doji close or doji high. Scenario 4, doji formation after a market correction. We will buy on a significant bullish candle and we will keep a stop loss below doji low or the doji close. So now you know what is a doji pattern and how to trade the doji pattern, right? If you like this video, give me a thumbs up by pressing the like button. We'll be back with another video. Till then, take care.